We now go to the exciting part of the program, where we'll talk to the guys from investments. Will be presenting our member investments and what the outlook is looking for us. I would like to introduce our speakers. We have Mr. Dominic Beange. He's our Chief Investment Officer. And we have David Kitchnoge. He's our Deputy Chief Investment Officer.
Thank you, Raymond. Good morning, everybody. I can see you in some of our centres. I hear Raymond's said that this is going to be the exciting part of what we're going to talk about this morning. So I thought the exciting thing that was going to happen this week would be the State of Origin tomorrow, but never mind. I now understand it's the investment presentation from Number One Super. Can I introduce my colleague David Kitchnoge, who'll be speaking after me. David is the Deputy Chief Investment Officer. He will take over in February next year. David's a very seasoned investment professional with experience in Deloitte, BSP, Kina Funds Management, our external advisor, and for the last 7 or 8 months with the fund. We're very lucky to have recruited David to take over, and I'm sure that he'll have a fantastic career with the fund and the returns to the members will be great. So as we change over in February, there will be one change which is dear to my heart. I'm a Blues supporter and David's a Reds, so the Maroons will take over in February, evidently. Let's go to the investment performance for the fund. 2019 had a recovery in the return for the fund when the return went from 3.7% to 7%. At the end of the year, the assets of the fund, the members owned 7.7 billion kina worth of investments. That's been a tremendous return, not only over the past year, but over the past 10 or 20 years. It continues to be something we should all be very proud of. That fund has got investments which are deliberately diversified, and we have a balanced portfolio. The members own investments in government bonds, properties, listed shares in companies like BSP, unlisted shares in companies like SP Brewery. But we also have an investment portfolio invested internationally, and the members own investments in Facebook, Google, Amazon, and some of the great companies around the world through our investment portfolio overseas. I point out here that the members get the profits from the fund. It's a members' fund. So the trustee is not a for-profit fund. The trustee is there to cover their costs. All the profits after that go to the members. And as the last point at the bottom of this slide points out, we try to balance our investment objective to make a return with having prudent risk. The trustees have reiterated and reminded us again this year and agreed that the investment prospective return for the fund we're going to aim for is CPI plus 2. We believe that is sustainable, and indeed we've done that last year. We're also trying to balance the risk and the return the risk that the return will never be less than zero, except in, say, 20% of the time, or 4 years out of every 20. In the last 20 years, there hasn't been a single negative return. We do need to make sure that we encourage our members to understand that all of these returns are not guaranteed and that there may be negative returns, and I understand the CEO will address that and has addressed that as we've talked about what should come by the end of this year. So let's have a look at where we've come from. This slide, rather dry and dull, shows you the return that we had in 2019 in the middle column compared to the previous year. If you look at the bottom row, in 2019 the fund had a return to members of 7% compared to 3.7% the previous year, so an increase. That net profit on that 7.7 billion fund was 504 million in 2019 compared to 274. It's almost doubled the profit, almost doubled the investment return. Where did it come from? As I think about these things, I always think about where our members' money is mainly invested. What are the big items. Majority of the fund's investments, the biggest single category, is in government bonds. So, interest income is very reliable and it's the biggest source of return for members. 306 million last year. Second biggest source of return was dividend income, mainly from Bank of South Pacific. And that bank continues to perform extremely well and continues to pay large dividends. The dividends in 2020 from BSP will be slightly lower. But dividends last year, 197 million. Property income. We earn rent on the buildings that the members own, 58 million. Compared to 59 million the previous year, not surprising that it was about the same. There was a big difference on the net gain or loss from investments. So the members get money from, say, companies like BSP, not only from the dividends that they pay in cash income, but also from the change in the share price. And overall, on the valuation of our companies we invested in, the valuation of the properties the members own, went up by 96 million, which was a major change to the previous year of minus 53 million. This year, we will not be looking to have that large an increase. It could well be a loss. Foreign exchange, to the degree that we have investments overseas, they are exposed to the risk that the PNG kina goes up against those foreign investments in value or goes down. Last year that was marginally positive compared to the previous year being marginally negative. And for accounting reasons, we recovered some loan impairments last year. That one-off item will not be repeated this year. So as you look back at last year, it was a very successful year for us. We've got a lot of money invested in fixed income securities issued by the state of PNG. They provide the bulk of the return to the fund. They also are very reliable returners. So this year, we will get more than 307 million in interest income this year. That's going to underpin the return to members. It's a very reliable source of return. So let's look at the next slide. Let's talk about the biggest single investment that we've got outside of government bonds. Our members own 12% of BSP. The biggest bank in the country, very well managed, very well governed, and that leads to a good investment outcome for our members. We've got 8.5% of the fund invested in this investment. We want it to go well. When the economy goes well, banks tend to go well, and of course in the COVID period during 2020, there have been an interruption to business, and that will feed through into the profits of BSP this year, but it's still a very soundly managed organisation and we like it as an investment. The members should be proud of their ownership in BSP. Let's talk about the next single largest investment owned by the members. SP Brewery, an iconic business in PNG. It's 5.5% of the fund. Number one super members own 20% of that brewery. It's been a terrific source of return for members in the past. Continues to be a very soundly managed company, managed by Heineken. And it's a very strong investment that we believe in. This year, however, with COVID, the brewery will not sell as much beer as they did the previous year for a couple of reasons. First of all, venues have been closed, as you all know. There's been restrictions on the sale of alcohol and the price has gone up due to an increase in taxes. So that investment's still a very sound investment, but the return from that for that company this year will be less than the previous year. This is important to us because it's the second largest single investment owned by the fund. Can we move on? Paradise Company Limited is an amalgam of two companies. There's Paradise Foods, M&R Biscuits, and now Lager Industries with Gala Ice Cream. This is 3% of the fund, and over 90% of that company is owned by Number One Super. The balance is owned by members of the Defence Force Retirement Fund, so wholly owned by two superannuation funds, and this business has been performing pretty well this year. Last year, the year before last, Paradise made an acquisition of Lager and introduced another stream of business. We would expect the company to continue to do those things and seek to grow. And you'll see them in the press and on social media quite often. And last week, talking about expanding their chocolate business. So we've got two parts to this business. Very steady M-Now biscuit business. That's gone well this year. And a discretionary spend for people who like to eat ice cream and who doesn't like to eat ice cream. So as we wrap up, may I remind you and talk to your colleagues about the importance of thinking long-term for your investments, and long-term in terms of your superannuation. Somebody who's 20 and enters the workforce and starts making contributions will be on a low salary. Their contributions will be small when they're 20, and they may not be able to see the potential benefit that might happen 30 or 40 years down the track. But we have to think in that way. So the trustees think in very long time frames. So we believe that we should be invested in the market. So sometimes prices for shares go up, sometimes prices for shares go down. But in the long term, they go up. Prices for property sometimes go down, but in the long term, they go up. And the members will benefit from having a long-term allocation to those things. On the right-hand side of this slide, you'll see a breakout of our international investments. Currently, 14% of your money is invested outside the country. We would like to increase that to as much as 25%, but there's been a delay in getting to that allocation simply because there's been not the amount of foreign exchange availability as we would like to be able to move there. But if we were to move there, we believe that will be benefit for the members because they'll get a more diversified portfolio, and those investments will also be more liquid so that if we have to sell them, we can, or if we want to sell them, we can. So we're going to think long term. I'd encourage you to encourage your colleagues to remember this is a long-term process for us and a long-term process from which we'll get a benefit by having our money invested for the long term. Here's where the rubber hits the road. The crediting rates have been good. Prior to 2000, the returns for superannuation funds were not disappointing, they were appalling. But the great success story of the superannuation industry this century is reflected in this chart. Every year has been a positive return. We can't promise it's going to be a positive return every year. It's generally ahead of inflation, so that we are protecting your money that you give to us for 30 years, so that when you get it back on retirement, it still has buying power. This has been a great story. We're hoping that we can continue to do it, and we believe with the mix of investments that we've got that we're going to do it. So think long term, and if you look back in the past, you'll see these things really benefit you. So as I look to the future, I wish you all well. Wish New South Wales Blues well tomorrow, and I'd ask my colleague David Kitchnoge, who's going to be the Chief Investment Officer as of February next year, to come and finish up and talk about the future with you. All the best.
Thanks, Dom. That's been a good summation of our historical performance, where the fund came from, and the current state of play. So looking ahead, so as Dom said, our single largest investment is in government bonds. What it means for the fund is that it provides stable returns, predictable returns for the fund. It places us in a position where we can, it gives us high probability of achieving stated investment objective of CPI plus 2%. But at the same time, it increases our credit risk to the state of Papua New Guinea. We're quite aware of that, and we're managing that on behalf of our members. What's happening in the property space? We are currently progressively updating our property portfolio. There's some old assets, old buildings that are owned by the fund that have been sold or in the process of being sold. We're currently selling, members in Port Moresby would be aware of Ben's house here in downtown Port Moresby. It's a property that the fund has owned for the last 30 years. We are currently selling that. We're also selling Era Romana, which used to house the fund's offices. And in place of those, we are replacing them with Deloitte House, which is our current head office. and the OPH precinct. And members in Mosby would also be aware that we are building a new shopping complex over in Waigani, Rainsview Heights shopping complex opposite Vision City. So we are continually looking to bring new properties to the market and selling off old properties to other players in the market. One of the main challenges that the fund faces is obviously shortages in FX. Most of you would be aware of that situation in the market. We currently have an ambition to invest 25% of our funds offshore. Currently, we can do only 15%, and we are looking to source FX to execute that strategy and place funds offshore. Investment in offshore obviously gives us diversification in the portfolio, and it helps to improve the liquidity of the fund. So FX shortages would continue to be an issue for the fund going forward. So overall, on behalf of the members, we are always looking to balance the returns with the appropriate amount of risk that we would like to take in terms of our investment activities. Thank you very much for listening. That's us investments.